Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son of a... God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. And man, we have a jam-packed week full of things to look forward to. CPI numbers, earnings are still going on, and we've got a lot that happened over the weekend that we need to talk about that could impact what's going to happen for the rest of the week. But before we get into any of that, guys, I just want to preface this by saying I have a cold. I'm keeping it at bay, so I do have a cough drop. So if it's driving you crazy in your ear, that's why. Sorry about that. But I want to. It's better than coughing in your ear. So I'm just gonna keep on keeping on, and we'll get to the starting five right now. What's up, Savvy Money Show? Rudy Brown, Airsoft Nomad, Parag Juneja, and Alan 316. You guys are our starting five. If you guys did not make it to the starting five, it's probably because you didn't hit the notification bell. Make sure you hit that notification bell if you're not if you are subscribed. If you're not subscribed, do both. What's wrong with you? Hit the subscribe button, hit the notification bell, and hit that thumbs up, because we got, like I said, a jam-packed week ahead of us. So yes, I was taking selfies for a family member. Sorry. Wanted to say hey to somebody. So my God, oil just hit $126 a barrel. WTI crude hit $126 a barrel right now. And it's just mind-blowing right now. I'm looking at futures, and everything's kind of down except for oil. We got the Dow, it's down 300 plus points. So it's looking as if, it may be a rocky start to the morning, but let's just pump the brakes, because we've seen this in the last 2 Mondays now. Oh, Rudy says, was it WTI that actually hit 130, Rudy, or was it Brent crude? Just to clarify, I thought I didn't catch that. So if you caught that, good eye. But if it hit 130, it's still crazy. It doesn't matter. It's over $125, right? It's wild, unbelievable. So looking at what's on the docket, why is this happening? First of all, big reason why this is happening is because we could potentially be losing 10% of the oil production, and that being from Russia, if the EU, Western nations decide that they're going to cut off accepting oil from Russia. Russia produces 1 out of every 10 barrels of the global oil supply. So that is major. That is huge. And so, I love the title here, thanks, Rudy. Appreciate the clarification. So, yeah, it was WTI crude that hit $130 a barrel. I must have missed that. But, man, Brent hit 137. That's wild. So, kind of begs the question, how much higher can oil go? I mean, we're now seeing oil as high as we saw it in 2008, which, ironically enough, was when I was in Moscow. I was in Russia then. And, can it go higher from here? I mean, last time, that was when we went through a big recession. That was the financial crisis of 2008. And I think that there's a lot of parallels that people are drawing, that this could be another situation in which we see a huge recession, right? Because prices are going to keep going up, and it's not just oil, right? It's other commodities. A major amount of the world's global wheat supply comes from Ukraine and Russia. I mean, that's a big deal. Corn, some of the other commodity prices are going to continue to go up. And so what does that mean? That means inflation's probably going to go up. And while we thought we could potentially see inflation come down, war, times of conflict increase that substantially, especially if things continue to accelerate the way that we see them accelerating. It's pretty wild. I mean, and to the extent, it's getting so bad that Elon Musk himself came out and said that we need to start producing more oil. So he said, I hate to say it, but we need to increase oil and gas output immediately. Extraordinary times demand extraordinary measures. He says, obviously, this would negatively affect Tesla, but sustainable energy solutions simply cannot react instantaneously to make up for Russian and oil gas exports. So, even Elon is talking about the fact that we need to figure out how to produce more oil, and there's ways to do that. It's very interesting. We're not seeing any kind of increase in production on the U.S. front, but the U.S. has decided that they're going to talk to Venezuela again to get their oil rather than from Russia, which is very interesting. Because the Trump administration imposed sanctions on Venezuela and said that they weren't going to buy their oil, and the Biden administration was on board with that. They didn't revert back any of that or roll back any of that, and for good reason. There was some really bad things going on in Venezuela. The Venezuelan president's POS, and so they didn't denounce the Russian invasion of Ukraine, for crying out loud. But now we're getting in bed with the Venezuelans, potentially. They were in talks. So just to give you an idea of what's going on with that, the Biden administration went and had talks for the first time since 2019, I believe it was, with the Venezuelan officials, and potentially looking to, I don't know what comes out of this. My guess is there's only one reason that they do that, and it's to potentially buy oil from them, basically reverting back those sanctions that they imposed on Venezuela. So I guess all the bad things that Venezuelans do is all forgiven because it's not as bad as what Russia's doing right now, right? I don't know. It's interesting. Let me know what your guys' thoughts are as far as that's concerned. Because it's just weird. It's weird to me. I think there's other opportunities, but I'm not quite sure that's the answer. It was also interesting. I thought that Elon Musk just made another mention about nuclear energy. And I don't know how I'm going to take Elon at his word here, because I'm sure he knows way more about this than I do. He said, hopefully it is now extremely obvious that Europe could restart dormant nuclear power stations and increase power outputs for existing ones. This is critical to national and international security. And then he said, for those who mistakenly think this is a radiation risk, pick what you think is the worst location, and I will travel there and eat locally grown food on TV. I did this in Japan many years ago, shortly after Fukushima. Radiation risk is much, much lower than most people believe. And so I thought that was also very interesting coming from him. And Elon was basically talking about, taking nuclear power and having it replace some of the oil supply as well, so we're not so reliant on oil and fossil fuels in general. Take that for what you will. Here's the interesting thing about investing in energy right now. As I said, the big question is, do we invest in oil right now? As you guys know, I am already pretty heavy in energy myself. I'm a big owner of Marathon Oil. I have been since the teens, since around $12. As a matter of fact, I've been in and out of that, playing the dips on Marathon. I own a decent amount of it now, and actually sold half of my position of Marathon on Friday because I didn't want to hold on to that much, because I had no idea what was going to be going on. The Biden administration also is administering tapping into the SPR again. If you guys recall, he tapped into the SPR in December, releasing around 40 million barrels of oil to help relieve some of the demand issues. And they're releasing another 30 million barrels from the SPR as of this weekend. It's still not going to matter. We go through around 22 million barrels a day. So we're going to add a little over a day's worth of oil to the U.S. It's not going to matter. It's not going to be enough to keep up with demand. And so I thought it was interesting looking at this. I don't know if I would be a buyer of oil all the way up here. But there's two sides of this story, because you have Carl Icahn, right, who bought the bottom of Occidental Petroleum back in 2020. And he also exited it this past week. So you look at Occidental Petroleum, it's a very popular This is one energy company that has made headlines because Carl Icahn doubled down on it at the basically the bottom of the pandemic. Back in March, he bought a huge stake in Occidental Petroleum. Has made it absolute killing. He bought it, around $10 a share, and as of right now, as of Friday, let's look at Occidental right now, and it closed in the 50s. He's made 500% on his investment, and he's out. Carl Icahn is officially out of Occidental Petroleum. Now, he cited some reasons as to why he was out. They had some differences as far as how Carl thought that the company should have been ran. Had some run-ins with the CEO, so maybe that's part of it. But I mean, can you fault the guy? He made $1 billion on Occidental Petroleum, but lo and behold, Warren Buffett comes in and buys it up. So he now owns another $5 billion worth of Occidental Petroleum, and he bought it all the way up here. The ironic part about this, as far as Occidental Petroleum is concerned, is if you guys might recall, Warren Buffett sold this all the way back here. This vertical line right here. August of 2020, he sold it at around $14, sold it for a loss. He still had some preferred shares, so he wasn't completely out of Occidental Petroleum, but he sold out of his entire common share stake all the way back here, pretty close to the bottom, and then decides to buy it up here. Now, I'm not saying that Warren Buffett is a shitty investor, but he's made some questionable calls as of recently. And when I say recently, over the last 2 years, and this is just the latest one. Now, granted, Berkshire Hathaway is doing just fine. Let's look at the BRKB shares right here. So you can see Berkshire Hathaway is absolutely crushing it. This is what it's been doing since the beginning of the year. No big deal. Went from $289 and then closed or hit all-time highs just last week at $329. So Berkshire has been on absolute fire really since the whole entire market has been losing its mind. So because of that, he's in a lot of value stocks, and that's the main reason why we're starting to see Berkshire Hathaway move. But when we look at what Warren Buffett has done essentially since the pandemic, right? He doubled down on the airlines in the middle of February of 2020, which is way back here, and then sold the airlines at the bottom. That was a really big question, really huge question mark, and underperformed the rest of the stock market in 2020. Obviously making ground up for that right now. But this is another one, in my opinion, that just doesn't make any sense. Like, why are we buying Occidental Petroleum after it's gone up 500% from where you bought it? So, I mean, can Occidental continue to go up? Maybe. But if I was Warren Buffett and I have billions of dollars, this would be the last thing I'll be looking towards to potentially buy. And I agree, Rudy Brown. He brought up a interesting point. This is Warren's type of market. Remember that for sure. But I mean, how much more does oil have to go up for Warren to make that kind of money that he could have made had he just held on to Occidental Petroleum? You know what I'm saying? Like, I 100% agree. I mean, being in the value stocks is 100% what you should be in right now. We've talked about that at length for months, right? The banks, Verizon, all of those. Like, there's so many good value stocks out there that were so undervalued coming into late last year, early this year, and really for almost a decade. Energy was a part of that. But to me, it's kind of like, are you late to the game at this point? Now, again, like I said, he's got stake in Occidental Petroleum before in the form of preferred shares and warrants, but he was without common shares of Occidental Petroleum up until last week, bought $5 billion worth. Now, this isn't a giant portion of his portfolio. We just take a look at some of the holdings here. The whole portfolio is $330 billion. So this is a very small portion that takes up the portfolio of Warren Buffett's Berkshire Hathaway. But, it's just kind of like, why bother now? Why bother with it at this point? Maybe, I don't know. I mean, Warren's not like one that obviously flips anything. So, and we know that as a long-term holder. But to me, it's kind of like, do we see oil going to $200 a barrel from here? Because that would be something that, like, if I'm looking at Occidental Petroleum, I'm guessing at least if I'm buying it at $50 a share, it's with the expectation that I could potentially double my money from here. I don't know. to me, I just would not be in oil stocks right here. I would wait for some sort of correction. This isn't me saying that it's going to go, it's going to crash or that oil is uninvestable, because I think that it very much is still. We take a look at the XLE, for example. This is at $75 a share, where it closed at last week. 52-week highs, and this is a very good example of where I could see you buying higher and selling, buying high, selling higher. But I think there's definitely room for potential correction. Let's just say that the U.S. does a deal with Venezuela. Let's just say that the U.S. finally starts to talk about producing oil in the U.S. That could bring the price of oil down. Does that happen? Does that happen? Does that not happen? I think there's a lot of speculation involved as far as that's concerned, but it's still a possibility, which is why I think that if you're not in energy right now, then I wouldn't be going and chasing after it at this very second. Keep an eye on it, but there's very interesting. We take a look at the last time oil was even remotely close to these levels, which was in 2014. We look at the XLE, and that was $101.52 was the high back in 2014. We go back in 2008, for example, where we saw oil at these prices previously, and the XLE was around 91.72. So it just kind of gives you an idea. The OIH is another good example of this, and that's one that's still trying to catch up. It closed at 261. This is the energy exploration ETF. Has companies in here like Halliburton and Schlumberger in its portfolio. Back in 2014, this stock was at this ETF was at $1,100. Sitting at 261 right now. So I think there's definitely a potential catch up. I'm not saying that the OIH goes all the way up here. There's a lot of other factors as to why it won't. But I think there's definitely potential for something like this that has lagged this oil run so significantly that we could see it go up maybe to around $400 on this ETF. I think that's potentially a possibility. So you could go into one of these ETFs. If you guys aren't into the ETF game, I certainly get that. I'm in Marathon Oil personally. I think this is on the verge of a breakout. You can see on the weekly chart here, we're now getting to the point to where we were back in 2018, which, as we know, oil is much higher than that now. And I've been playing this game where I will sell on the rips of Marathon Oil. Once it starts to dip down to a reasonable level, then I'll start to work my way back in. And I think that's exactly the type of scenario that we're going to be getting ourselves into, maybe this week, maybe next week. But that's why I decided to reduce my exposure in Marathon on Friday. Am I missing out on potential gains? Yes, but I'm also minimizing my risk for the what if, right? There could be a huge red candle for whatever reason that takes place next week. We just don't know. There's a lot of variables that could create such scenarios in which we see Marathon go absolutely crazy, or it has a pullback. It's going to respond to the price of oil regardless. Your big ones, your big dogs, ExxonMobil, of course, is definitely one that you should be keeping an eye on. Chevron as well. It could be one that you guys take a look at. That one is just absolutely ripped. You could look at ConocoPhillips, $100 oil, $100 a share. I mean, these are all ripping. Then you see what I'm saying here? These are the weekly charts. So I think that nothing goes straight up. And this is almost kind of going this way. This is almost going straight up and to the left, not up and to the right. You know what I'm saying? So I think that there is going to be some sort of correction in oil. I don't think that we see it come back down to these levels. Not 20. ConocoPhillips isn't coming back to 20. Oil isn't coming straight back down below $100 in any kind of quick fashion. But I think that there is going to be an opportunity for you to get in at a little bit of a lower price. And you guys know me. I always tell you guys, don't try to time the market. Just be into something that you truly believe in. And that's it's such a situation, a scenario in which, yes, but in this case, I think there's a little bit of an exception to the rule. I think there's a little bit of an exception to the rule in which you could look at something like a ConocoPhillips and be like, oh yeah, I see it 78, real easy support. A newbie could identify that. So, I think that that's something that you could certainly keep an eye on. There's a lot of options here for the energy trade, and I do think in a certain sense it is just getting started, which is why It's not crazy to think that Warren Buffett shouldn't have bought up here, but it is like just puzzling to me. Like he's crushing it, right? Berkshire Hathaway is absolutely crushing it in this environment. But it just makes me scratch my head when you buy something like Occidental Petroleum that's up 500% in less than 18 months. That to me just doesn't seem to fit his MO. Am I the only crazy one here? I mean, let me know in the comments, because I'd like to know from you guys. Like, does it make sense? Is anybody looking to buy oil this week if they're not in already? Like, am I crazy to think that? Who's got the risk tolerance to get into something like this all the way up here? Who got the balls? Let me know, guys. And then also make sure you're hitting that thumbs up if you are liking the stream so far. We got 33 likes, 136 of you are in the house. A little bit of a light Sunday, but that's all good. Thanks for the support. Thanks for hanging out. Jared Helm is averaging up. We have Jared that's looking to buy energy this week. If you are buying energy, what are you buying? What are you going after? Mavis Beacon says, hell yeah, we're buying. Rudy Brown says, I don't think you're crazy, but I do think he knows something we don't. I think he sees at least a 30 to 40% upside from here. Potentially. And maybe these equities, especially after earnings, will have to catch up to the price of oil, right? There's certainly that. Yeah, I see you guys. I see a lot of in and out on the same day, says Yemet. That's something that I've actually considered doing. So my marathon oil trade has been very predictable. Let's look at we look at the 5-minute chart on this, and you can find any of your favorite oil stocks or energy stocks right now, and they're all doing the same thing. You have these massive gap ups in the morning, which Marathon's going to do, and then it just drops off throughout the rest of the day, levels out, drops off, levels out. Even back here on the first, drops off, levels out. I think that's exactly what we're going to see on Monday. So I'm deciding to go ahead and sell the remaining portion of my Marathon oil trade at the opening bell, and then I'm going to probably buy back in if it does the exact same thing it's been doing for every single day over the last 2 weeks. So that's my game plan on Marathon Oil. I gave you a little freebie there. So if you guys aren't familiar with the channel, or if you're new, make sure you hit that subscribe button first, of course. But then also next to the subscribe button, there is a join button. If you guys don't mind joining, if you guys would check out the join button next to subscribe, you get a watch list from me. I'll talk about some of these trades that I'm making with a lot of our Chaos Crew folks. So you can become part of the Chaos Crew. Hit that join button next to subscribe. You get the watch list. You get our Discord. You get private live streams with me as well, and my portfolio, how it's performing, what my strategy is moving forward. It's been a tumultuous year. I'm red on the year. I don't know a lot of people that are green on the year, but it's not as bad as it could be. A lot of that is because we get to feed off of each other. We have a great community of other like-minded individuals, traders, all that good stuff. Newbies and old bees. It's a great community to be a part of. If you guys want to be part of that, it just starts out at $5 a month. Can't beat it. It's a huge help for me, help support the channel, the studio you see behind you. Love to have you guys as a part of the crew. If you don't see the join button next to subscriber, you can't join via YouTube. You can also go to ownthechaos.com. That link is in the description. I also have an interesting proposition for some of you guys as well who maybe aren't exposed enough in value stocks or dividend stocks. Stay tuned to the end of the show because I'm going to go over that as well. I have another product that we haven't really put out a whole lot as of recently, but we're going to get back into that because it is just a phenomenal product. It's going to give you that exposure that you're going to need in this environment. It's killing it right now. You guys are going to love it. So stay tuned for that. That being said, next up, we have earnings this week. Believe it or not, on top of everything else that's been going on, we have earnings as well. Earnings season is not yet over, folks. And we have some big ones this week as well. I have a couple that I picked out. So Monday, we don't have a whole lot going on. There's some really small companies that are going to be reporting on Monday, but Tuesday is when we see the bigger companies start to report. We got Dick's Sporting Goods, We got Petco. We have Bumble, Stitch Fix, a couple of other ones. Those are kind of like the big headline names that are reporting on Tuesday. Then Wednesday we have CrowdStrike, Asana, Express, Thor, Campbell's. Just not big giant names that we're used to seeing, but they're still. CrowdStrike is going to be one that I'm going to be talking about in just a second. Then we have on Thursday, we have JD.com. The Chinese stocks have just been absolutely hammered. So perhaps JD can come in with some earnings to actually start to get that moving. Then we have Blink on Thursday, DocuSign, Rivian, Oracle, Alta. And then Friday, it's a bunch of nothingness as well. So not like a terribly exciting earnings week. However, notable ones. And the first one that I think is worth watching this week is going to be Dick's Sporting Goods. So Dick's has been absolutely just gone through the ringer, right? I mean, ever since its highs back in September of last year, it's been absolutely hammered and hasn't really come back. And honestly, for no good reason. I mean, the earnings that they've had since then have been phenomenal. And just last quarter, they talked about how inflation was really kind of a non-factor for them because they're still able to price in their products and demand is still so strong that it hasn't really affected them to any extent. Now, there is some of the issues as far as their relationship with Nike that has kind of caused some of this to take a bit of a dive. But I'm sorry, no, that was Foot Locker. Nike, Dick's Sporting Goods still has a great relationship with Nike. Nevertheless, some of the retail stores, and we saw Gap just last week report, and they went ape shit, right? I mean, they went crazy. So we look at the 5-minute on Gap, and it shot up. Obviously, it came back down because it got affected with the rest of the market. But we take a look at this huge beat on Gap, and then they raised their guidance. It was a phenomenal quarter for Gap, and then obviously it got pulled back with the rest of the market on Friday. But nevertheless, this to me, I think, is a precursor to what we could see with Dick's Sporting Goods. So they're, like I said, we take a look at this daily chart here. I think that's set up for a really nice move, especially if it gets up over the 200-day moving average. We take a look at some of their statistics here, and their PE is ridiculous right now. It's trading at 7 times next year's earnings, and they just have an excellent balance sheet, excellent cash flow. Demand is there. Dick's Sporting Goods, in my opinion, is still undervalued, and I've stood by that since the 130s. I still think that Dick's Sporting Goods is worth watching this week. Now, we also have CrowdStrike that reports on Wednesday. I will be live for the CrowdStrike earnings report, the earnings report to come out at 3:45 p.m. Eastern time. So make sure you're hitting that notification bell to get notified when I do go live. This is one I'm super excited about. Their estimated earnings per share are at 20 cents. They're expecting around $410 million in revenue. The stock got absolutely hammered on Friday. This is one that I'm actually considering getting in at these levels. Came down around 6.5% on Friday. And I think this is a good opportunity. Cybersecurity isn't going anywhere. It's only going to continue to go up in demand. And I would imagine that their earnings this coming week are going to be phenomenal. I think that they come in at 30 cents at least. And I think they could come with upwards of $500 million in revenue. And I think I'm being conservative at this point, as far as that's concerned. And I think that, in my opinion, it's worth a buy. Now, you could make the argument here that it's a little overvalued, especially with their forward PE sitting at around 300 times next year's earnings. However, the growth story here is really what people are attracted to, and I think that that's going to continue to be a thing, especially as we see tensions get heightened by the whole Russia-Ukraine ordeal and cybersecurity and cyber warfare becoming more and more of a reality of potentially happening. So we'll keep an eye on that. Zach Nicholson referring to my Dick's Sporting Goods. What the F are you talking about? It's up 60% for the year. For the year, it is not. So let me correct you there. If you're talking about the last 52 weeks, yes, Dick's Sporting Goods over the last 52 weeks has done extremely well. But it's also come down from $147 to $109 and actually came in lower than that. So it was down over 30% in about 3.5-4 months. So yes, it got wrecked. Regardless, from its highs, it got wrecked, period. But yes, over the last 52 weeks, it's done well. Over this year, it's done very poorly. For 2022, it's done very poorly. Okay. Lastly, as far as ones that I think that are worth watching this week on earnings is Ulta Beauty. I think Ulta is another one to watch. They absolutely crushed earnings last time around as well. The growth here with Ulta has been phenomenal. Now, it's fallen out of favor because of just obviously the overall environment in the market. It was up as high as $422, and that's a really tough resistance for it. Came all the way down to 366. It's hugging that 200-day moving average very, very well. So technically, I like this chart a lot. We take a look at some of the statistics here with them as well. It's still only trading around 21 times next year's earnings. I really like the PE here. I like the chart setup. Their estimated earnings per share are at $4.56 that they're going to be reporting on per share, and then $2.69 billion in revenue. There's a lot to like here with Ulta. The investors are looking forward to earnings from them as far as the acceleration in their growth. Last quarter, their sales accelerated 29%. And I think that this could be another great quarter for them. Demand is still ridiculous right now. And companies like this, and I think this kind of falls in the same type of mindset of like Dick's Sporting Goods and some of the other retail companies, is that they've been able to raise their prices and nobody's batted an eye yet. Now, I know at some point, this is not going to be the case, right? They're going to get to a point where prices go up and consumers are like, you know what, we're not paying for them anymore. I just don't know if now is the time that actually happens. And I think that Ulta can do really well on their earnings this coming week. Super pumped about this one. And then just want to check in with you guys. Let me know what you're excited about. Do you have anything that you guys are in particular looking at this week? In regards to earnings, in regards to energy, how you feeling? Do you have cash on the sidelines? Are you fully invested? Are you somewhere in between? Let me know. I'm going to go ahead and check in with some of the comments here. Oliver Thorpe asks, would you buy Meta and Microsoft right now, or do you think we will see further lows first because of the Russia situation? For now, I'm just waiting. So it's a really good question. Meta Platforms has been absolutely crazy to me. Did they deserve to sell off after their earnings, the most recent quarter? Yes. I think that it was a terrible quarter for them. They've lost focus on what actually makes them money. And so they've just gone a little bit too hard into the metaverse, in my opinion. That being said, I think that this, if you have the patience for it, depends on your timeline here, Oliver. But look at this. This is a FANG company that's trading at 16 times next year's earnings. You get and not only that, the company brings in $40 billion in free cash flow. So if this, didn't have the name Meta Platforms attached to it or the ticker symbol FB, you looked at the fundamentals and you looked at the chart and you're like, this is a screaming buy. So take the name and the company that's, the brand that's attached to this, you would buy this hand over fist, right? And I think that there's a distinct possibility that this goes much higher from here by the end of the year. I think we could see, and again, this is going to depend on Facebook's ability to navigate the environment that they're in right now, especially with some of the battles that they have with Apple and the security side of things. However, I do think that they have the potential to rebound and recover from this. And if nothing else, even if they don't do anything and it's status quo, Facebook should be higher, period. It just should be. Doesn't mean that it will be, but if you just look at it on paper, this is a screaming buy. Stock's super cheap. Okay. Microsoft, a little bit of a different story. I wouldn't say that it's cheap. I wouldn't say that it's cheap, but I would say that it's come down enough to where I would say it's at a reasonable level to buy. I actually own this as well. I think that, it's been tough since it's come back down below the 200-day moving average. I would say that there's a possibility that Microsoft could come back down to visit the 281.50 area. That was a bottom support for it back in October. It was a bottom support again back in January, and then February it had spiked below that, but then closed above that area on the February 24th. And so I think that there's potential that this could come back down here, but also consider this. Microsoft, and I made a video about this. Go check it out. My latest pre-recorded video on the channel talking about stocks that would benefit in times like this, in times of conflict, in times of war. And the obvious ones are out there, right? General Dynamics, Raytheon, Lockheed Martin, so many other ones. But Microsoft is probably one that people don't realize. Microsoft was the first company that discovered Russia's cybersecurity attack that took place back in 2020. They have a close relationship with the U.S. government, as well as many contracts with them. And I think that Microsoft actually does benefit in a time like this. Maybe we don't see that reflected until the next time their earnings come around, or maybe once we get through some of the treacherous and choppiness that we're seeing right now. But I think that this is going to be a really good opportunity, especially if it comes back down to 280. So yes, I like Microsoft a lot, and I even like Facebook as well. I think they're both going to do well. Okay. Have some people looking at SoFi. Deadeye says Ford, I'm short on it, and the gap to 15 and financial supply chain. I don't understand that one. I guess you're just short on Ford. I got you. Facebook is a buy below 200. Says Yamit. Is it Yamit or Yamit? Yamit. Okay. Looking at a couple other ones. Lots of people on SoFi. Let's take a look at SoFi. Where are we at on this one? So SoFi came in, actually had really good earnings. It's gotten punished because of the environment that it's in right now. I think this is still a screaming buy. I like SoFi here. I don't know where I would want to buy it just yet, though. It is. I'm looking at 985 potentially being a bottom here, but it's still too early to call. I mean, here's the thing about SoFi, right? I actually had this in the watch list earlier this week, and I mentioned that if it pops back up over the 50-day moving average at around $13, that's still a ways away from its all-time highs. You're still getting it low. So even if you just wait for the pop or wait for some sort of momentum to return to this to actually change direction, because right now it's just not. It's still in a downward trend. So just looking at the chart, this is something that I would say I would not be buying right now unless it started to change direction. Now, you could make the argument that, if you're looking to average down in this, I hear you, but I think that there is an opportunity to still average down without trying to just guess the bottom or catch a falling knife. I still like SoFi long term. I think the company is doing extremely well. I think the growth is great. The recent quarter that they reported on was actually really great. I thought it was amazing. But it's just not in favor right now. It still reports losses. We're in a rising rate environment, and we know that these stocks like this get punished. So, that definitely is a headwind for it. However, the growth here is spectacular. I think it does actually start to make a move, maybe even by the second half of this year. So I think that as long as you have patience for SoFi, you'll be in good hands. But if you're looking for this short term, I think you might be in for some a rough go of it, I should say. Okay. SoFi does have options, don't they? Or no, or don't they? Yeah, I can buy options on SoFi. They're all right here. Okay. Nicholas P. Good question. What are your thoughts on keeping 5 to 10% of your wealth in physical gold and or silver, especially during stagflationary war times? I like the idea, but I'm just playing miners for now. I think 5 to 10% is a healthy amount. If you're looking to own any kind of precious metal, I think gold is obviously doing extremely well right now. I don't have like a legitimate opinion on it. I think it's fine to own gold, and I think it also depends on your financial situation. Where are you at in life? What are you using it for? What are you buying it for? Are you buying it for long-term sustainability, for long-term, income, whatever it is, whatever your strategy is and why you're buying it. But 5 to 10%, yeah. If it's a long-term portfolio that you're looking to retire on, then yes, I think that 5 to 10% is perfect. I wouldn't go any more than that on gold because it is very sensitive depending on how good or bad the economy is doing. Russia signs a treaty with Ukraine tomorrow, then gold's going to crash. Oliver Thorpe said he's excited to see what happens with Asana. Great product, although it could be a tough year until they make a profit and interest rates calm down a bit. Yes, 100%. I love Asana as well. It is up there in value. We'll see how the earnings go. I mean, we've seen these types of stocks get absolutely punished if they come in and kind of have any kind of talks about slowing and growth, right? Snowflake is the latest example of that. Snowflake got absolutely crushed. I mean, just hammered. And I would say that Snowflake is in the same type of category of stocks that don't make money and are in this environment and are going to be the most sensitive to rate hikes. So yes, I would be careful with Asana, but I do love the company. I don't know if I would own it right now. Maybe wait till after earnings and see what it does. But yeah, I like Asana still, regardless. Okay. This is a great point too. Excuse me. Airbnb is down 140-ish. I want to say that I'm surprised by this, but I guess I shouldn't be. Let's take a look at the chart here. Airbnb is one that I own. It's actually at my strike price right now. I bought a leap on this pretty deep in the money thinking that I was going to be good, but now it's come down to my strike price. I think this is an opportunity to Airbnb. They had a phenomenal quarter. They just reported on, and I think that this is just getting lumped in with a lot of the tech stocks that have been beaten down. This company is doing nothing but growing. And so if you have the patience for it, especially given the time that we're in, I think that Airbnb is a solid buy, and I would be all over this and I might actually consider adding to this. If this comes down to the 130s tomorrow, look out for me to be buying potentially some Airbnb myself. I have a couple of things on my watch list that I'm looking to scoop up. This might be one of them. CrowdStrike might be another one. Price of travel is going through the roof right now with cost of fuel by and large. Yeah. You know what the crazy part about that is, Rudy, is that people are still getting out there. They're like, you know what? COVID's over, essentially. And nothing's stopping me from going out. I saw a meme earlier that was, I don't know what COVID, something about COVID being over and like everybody can go back out now. And then, here comes gas or oil. Says not so fast. It's just like, God damn it. I don't know. I think that travel's still going to be wild, regardless of where energy prices are and where oil prices are. People are out there going to be spending that money no matter what. We could see a shift. We could. But I think that people are still going to get out and travel no matter what. I think that'll be the last thing that they give up is going on vacation, especially after the last 2 years. Mike Hudson just said he booked 3 trips for this year: Baltimore, Hilton Head, Hawaii. Right? And Mike, I doubt that $130 oil is going to stop you from doing it, right? It's pretty crazy. By the way, man, I'm looking forward to seeing you this week. Mike Hudson's coming to visit me for my birthday. Probably not for my birthday, but just on my birthday. So I appreciate that. It's gonna be a good time. It's gonna be fun. Yeah, Rudy says he lives in a producing state and they're over 405. I don't think we're quite over that much here in Maryland. We're getting close. I think it's the high 3s, but I don't think we're quite over 4 just yet. All right, guys. My voice has about had it. I have fought off quite a few coughs here, and I think that's going to do it for me. I appreciate you guys hanging out. I did promise you, though, I was going to share something with you, and that is our We Trade HQ or We Trade Labs dividend bot. I've talked about this once about 2 weeks ago. I'm going to bring it up again. I'm selling you guys we've created a dividend bot. It actually automatically trades for you. If this is something that you're interested in, their link is in the description. This has outperformed the S&P 500 since inception, the beginning of 2021. 31% returns compared to 16.92% returns since 2021. And this is specifically allocating to dividend stocks in general. And these aren't just, they're mostly dividend aristocrats, which means that they are companies that increase their dividends every year. for 25 years straight or more. Stocks like Coke, Apple, and many others, Johnson and Johnson, a lot of companies in here, and they've been and this is the portfolio itself has been outperforming substantially, especially in an environment like this. You want a product that's going to be essentially inflation proof. This is something to potentially consider. So the dividend trading bot focuses on high value blue chip dividend stocks at a lower price and near the dividend X date. So it likes to buy it before the date and then is usually out after, unless it makes sense to hold and based off of the metrics that we have in place. I don't want to give too much away, but I will tell you that it does involve using the 50-day moving average, and then it'll take profits when the code it makes sense for it. And as it says, it will hold to maximize the dividend payments when possible. So if you guys have questions, please don't hesitate to hit me up. I'll get more specific on it if you have questions about it. But nevertheless, this is a great opportunity to be in something, maybe diversify your portfolio a little bit, and you can set it and forget it. You can't be in front of your computer all day, every day trading like myself or some of the other people that might be watching. This could be an opportunity for you as well. So take a look at it. The link is in the description if you guys are interested in it. We'd love to have you guys as a part of it. We have a lot of folks that already are, and they are loving it. And obviously, it's been doing really well for many of our folks. So that's going to do it for me, guys, this evening. I appreciate you hanging out. I'm going to be back tomorrow at 3:45 p.m. Eastern time. I'm probably not going to be reacting to any of the earnings because there's not much to go off of as far as earnings are concerned, but I'm sure we'll have lots to talk about developments that go on with the market tomorrow, and I'm looking forward to it. So guys, thanks so much for tuning in. Make sure you hit that like button on your way out the door, and I'll see you tomorrow. Bye.